Welcome to the StockMiner.com studios. I'm your StockMiner, Brian Johnson. We're getting ready for a new week of trading, coming into our second week of trading here in August. And as the temperatures go up, let's see if the price will follow in the markets. Lots of consolidation. Look, move up, consolidate. Move up, consolidate. Now, we had this big move down, job numbers on Friday, only to be met by more buying as we came into the end of the day. This is what we saw a lot of about a month or two, three back, where it was every time the bears moved it down, the bulls pulled it right back up again. So we're seeing kind of more of the same action that we did back then. Our levels have not really changed. Okay? Still looking at this 10,700 level, still watching the 10,500 level on the more conservative areas for our entries. Markets or futures are not open yet, so I don't really have a clue what we're going to see or what we might see in the morning. But just watch these levels as we continue into Monday's trading. From a daily standpoint, there's that big tail that we saw put in. Huge wick on this candle. Now, it did kind of end up as a big hammer candle, but I really don't put any... I have no bias on this particular candle whatsoever at this point. We'll wait and see if anything comes of it. We're just waiting for these breaks. This break below 10,600, still a more aggressive entry to the short side if you are day trading. If you're going to take any other trades, maybe at this point I might even wait for a break below 10,450, 10,4, actually maybe 10,400 before you start looking to the short side in a more conservative manner. Yes, I know that's a good 200 points away, but we're just looking to save money here. With this consolidation that we've seen, you need to be very careful with your money here. Don't throw it out the window and just start gambling at whatever comes along. Wait for more conservative entries before you go throwing your money at it. You'll be well rewarded in the meantime. Anybody trying to play this thing long or short last week, except for the Friday, if you tried to play this Monday through Thursday, it would have been very difficult trading. You'd be better off to just wait and see what happens with the markets themselves. We got a good break to the downside, only to see that buying action come back up towards the end of the day. Let's see if that continues. Still watching this overhead resistance level, and that now will be up around 10,750 to 10,800 if we continue to move up, and depending on how rapidly we move up. NASDAQ on a 60, still trying to hold this upper level here. We're still watching that 1911. It's really about 1911 to 1920 is still my overhead levels to watch, and you can see right here why. Here's the 1911 area. Right above it, right around that 1920, is the more heavy level of overhead resistance on the NASDAQ. Big news, any kind of break above it, still good opportunities to see a little bit more upside here to the NASDAQ coming back in or around maybe 1940, 1950-ish on the NDX before this move is over. Really watching this blue line as well for our moves to the downside. Keeping in mind all of the moving averages are starting to consolidate right down here in these levels. So we must be careful. I'm always careful shorting the NASDAQ anyway, but you must be extra careful because of all these moving averages down here. From a weekly, we have been moving up the past 4 or 5 weeks, but not at any great rate. Small little candles on the way back up, still trying to grind its way upwards. Anything up and above these higher levels maybe get us back to, once again, 1940. I like that level there. I like the 1960-ish level or so too, above that. But we're just seeing a real slow, methodical grind to the upside by the bulls here. I'm just not completely sold yet on this move upwards. From the 60-minute on the SPX, same thing. Big move down, consolidate, big move right back up again. Still looking for overhead levels to be broken. And that is up and above, I don't know, maybe 1125. I'd probably up that now a little bit to the 1130, 1135 area. But keep in mind that there is overhead resistance coming up in quite a few places here on the SPX. One of them being about 1130. Next one being about 1140, then 1150. So about every 10 points up and above these areas here. Not a bad idea, though, to maybe take a little bit of a long, especially if you're just day trading the markets. To the downside, you really want to wait till it breaks down through this area here before you start looking at any kind of a short entry. But you can see what we're heading towards here. This is just a slow, once again, methodical grind up by the bulls, but no real push behind it at this point. So we got to remain cautiously bullish, but yet bullish on the markets until proven otherwise. I don't see any reason to get real bearish yet. That can change at any time here, especially coming into this week. But until it happens, until we see these breaks down below these areas, guys, I'm still neutral to bullish. Going to keep that bias. From a weekly, we're holding this 20-week moving average, but once again, the push-up is not strong so far. If we can get a heavy push of buying above these areas here, now maybe we see it run. But I'm still looking at 1140, 1150 as overhead resistance areas. VIX on a daily, you can see it dropping ever so slightly, kind of consolidating down here into what looks like, if we put a technical analysis spin on it, a falling wedge. That falling wedge would then mean more of a bullish look to the VIX. So we're looking for fear to return to the markets, which it absolutely has not at this point. There's just none in the markets as of right now. Weekly, same thing, grinding its way downwards, but no fear coming in quite yet. Still no reason to get overly bearish on this market until we can see the markets move down and the VIX start to spike a little bit on fear. Apple drew in a little line for you to watch here to the upside, up and above moving averages and up and above about the 262 area. Not a bad idea to start looking at a little bit of a long play in Apple from an intraday standpoint, if nothing else. Still a ton of support and resistance in this area. Apple just chopping sideways. Moving averages above us, moving averages below us, support or resistance lines above us, and here we are stuck in the middle with you. Kind of in this middle area here, just sideways since the announcement of earnings. Going nowhere. This is all consolidation. Wait on Apple. Wait on Apple. From a weekly too, you can see it just putting in very little trading in through here. Lots of indecision. Once the break happens, though, I'd be on your toes. Apple could really move one way or the other. Is it up? Is it down? Don't know. We break below the 20. I'm really watching this 240-ish area down here very closely. FAS on a 60-minute also starting to push back up towards this overhead level. I like trades up and over about 23.50 or so to the long side and or 22 to the downside here. From a daily, same thing here, looking at about 24.50 to the long side and or $22 to the short side. This does still look, while it is consolidation, you can make an inverse head and shoulders out of it. You can and maybe consider this just a pullback, whatever you want to do. Fact is, we're consolidating. We are going nowhere. So we're waiting for breaks below 22 or above maybe 24.50. FAZ on a 60-minute came up, hit the 14, rolled right back down. I'm really looking for moves maybe back down below this 1325-ish area for the more aggressive, ultimately below about 1275 for the more conservative on a short. Back above, I'm still going to call it 1450. I like it on a 60. I like it on a daily. I like it back up in this area before you look to go long FAZ at this point. As you can see, just a lot of indecision going on here as the markets kind of work their way around and try to figure out which way are we headed next. It's anyone's guess, guys, at this point. If I put a little TA on this, I can maybe make some sort of a falling wedge out of it as well, just like the VIX. Doesn't it look like the VIX? Yeah, it kind of looks like the VIX. And that would mean that we might see a little bit more bullish action to this, but boy, I'm looking for confirmation. You're not going to get me in early on this thing. These financials have not been stable lately. It's up, it's down, it's all moving sideways, just like Apple. Look at this. If you were long or short back here in May, we're into August and we haven't gone anywhere. We're still straight across. Longer term investors are probably gnashing their teeth right now because they're not making any money at all in the markets. We're just flat right now. What does that tell you? Markets don't even know which way to go. And we'll see how this thing all plays out. This looked like a pretty clear 1, 2, 3, 4 with a 5 maybe up here. Now we're looking at who knows what this is. This is just ugliness at this point. But the bulls pulling it back up have to keep me neutral to bullish. Keep that in mind coming into Monday. Wait for these levels to be broken. And let's see what happens in the first day of trading tomorrow. We'll see you again tomorrow night. Bye.